What's up guys, welcome back to InvestingPH. My dividend portfolio's value for the end of July is now 2,235,941. This is with a total return of 13.47% or 265,441 pesos, as my total invested money is 1,970,500. Again, I have never withdrawn anything from my account ever since I started investing back in July 2019. This month marks my 4 years of investing, so I've consistently added as much of my income every month and reinvested all capital gains and dividends back into my portfolio to take advantage of compounding, as it is the key to growing your money in the long run. Now the PSE index is still nowhere near its pre-pandemic point. It's down negative 19.29%. As for FMETF, also down negative 14.28%. If you don't know what's FMETF, it is the only ETF that tracks the PSEI in our country. So for the past 3 years, my dividend portfolio has outperformed the index. This is mainly because of the dividends I've reinvested, which has now reached 204,398. Most of my gains actually come from dividends. This year, I've received 71,178 pesos, and there's still more to come. A lot of the companies I hold still have a few rounds of payment left, like my two REITs, MREIT and DDMPR. LTG, which is by far the largest contributor, Security Bank, Globe, Shang I think still has one round left, All Homes which always pay in December, AC, and Megaworld. My estimated year-end dividend income is around 110,000 pesos. Now if you look at the past 12 months, my income is 110,150, or a monthly income of 9,179. This is from August to July 2023. I'm just showing you the graph July 2022 to compare how much my dividend income grew from the same month as last year, which is an outstanding growth. Last July I only received 3,060 pesos, and this year 9,633. This is a 41.41% growth. If you look at a wider period, all my monthly income has had substantial growth. Imagine back then when I started, I only received 161 pesos, and the next year was only 8,718. Now, there are months I'm earning 15k, and the highest was March when I got 17,977. This is already a good enough income to cover most of the basic needs, like electricity, water, and food. The average salary in the Philippines is said to be only 15,200 in 2020, so for a dividend income that requires no effort at all, even while sleeping, a 9,179 monthly income isn't that bad. This is what I love about investing. I can already see my journey toward financial freedom, and this is only from dividends alone. Yes, it's a slow process, but eventually when compounding is at its peak, my dividends would be even bigger than my salary, and this isn't just a dream. If I continue this process, if I was able to achieve almost a 10k average dividend income in just 4 years, what more 10 years from now? I'd rather do this than take my chances from fishy investment schemes which promise triple returns in just a few months, which a lot of Filipinos have fallen victim to. News after news of Filipinos losing a lot of money from these schemes that promise huge returns. That's why I always remind my viewers to do your homework first before investing in anything. Just like in stocks, don't just invest in that company because it's popular or it's rising so fast. Your decisions should be based on your research. How is the company? Are its financials okay? Are debts managed well, etc.? Imagine that wasted money could have given you a good amount of dividends and capital gains already if you put it into the right vehicle. So remember to research first. Don't believe anyone's word, even if it's one of your relatives, friends, or social media. You should always double check what you're going into. And since we are talking about research, one platform that helped me to research and filter out companies to invest in is simply Wall Street. They have tons of data available for you, and the way they present it is so clear and easy to understand. They give graphs, comparisons, and explanations wherein a beginner investor could understand. They also give you updates on the stocks in your watch list, from earnings release, dividends, insider buying or selling, and when the stock falls below your computed buy price, so no need to manually research each company you have for the latest stock news. And speaking of buy price, they also have a computation for you. The best part of it, they have two ways they computed it, from discounted cash flow or from analysts themselves. So if you don't know how to compute it, this will definitely help you out. But a warning, only use this as a guide. You still have to do your research well to identify if the stock is really undervalued or not. And there's more, they also have a portfolio tracker that lets you assess the health of your portfolio. So if you want to try it out, they offer their basic plan forever free, and if you do sign up using my link, You get a 14-day free trial of all their platform's features. Not only that, if you avail of their paid plan using my link, you can get up to 40% discount. So what are you waiting for? Try out Simply Wall Street. Going back to my portfolio, the stocks I bought this month are DNL, MREIT, DDMPR, Security Bank, and I've added more to Home, which was the newest addition to my portfolio. Some have asked me how I can maintain my composure and even add more shares to stocks in my portfolio that are still negative. Well, the same as what I said a while ago, each company in my portfolio I've researched well myself. I know these companies are strong, have good financials, and I know when they are trading at a discount as I've computed my own buy price. By the way, if you haven't watched my video about it, there's a link below. So even though their price dropped, I know their financials didn't change, and I know the company can weather the current problem it is facing, just like during the pandemic, when most companies were battered hard. By knowing the details, I can rest assured that the company will survive and can continue to grow more in the future. For example, I bought more shares of Pure Gold when its stock price fell below 30, because when I look at the company, it has continued to grow its revenue and earnings consistently for the past 10 years. That is superbly managed, and for price valuations, price is only trading 8.5 times its earnings, and book value is trading below 1. This means I'm buying 1 peso of equity for only 0.9 peso, which is a discount. You see, with this idea, even when its price is falling, I can rest assured that this company is still doing great, which means I'd buy more of it. This is a common error of most investors. They buy at the wrong time because they don't know what they are investing in. They panic when prices fall and buy when prices hit all-time highs. Always the other way around. And one of the best reasons why I like it when the companies in my portfolio are trading at a low price, its dividend yield also increases. Back then, Pure Gold won't even be considered a good dividend stock, but now with its price so low, its dividend yield is at its highest, and in Pure Gold's dividend history, they've increased it over the years. So since I'm a long-term investor, this is a win-win situation for me. While I'm waiting for the price to go up, I'm still earning consistent dividends, and there's a high chance that they will increase it since they are consistently growing their earnings every year, and I'm also sure they can easily maintain it since they are managing their debts well. This is the biggest advantage of knowing the details of the companies you are buying. It will help you maintain your composure and make the right decisions, may it be when prices are low or high. Anyway, moving to the stocks I own, Globe is still the largest, which takes up 11%, LTG 10%, Megaworld 9%, and the two REITs MREIT and DDMPR 6%. That's my top 5 holdings, and with the continuous acquisition of All Homes, it's now 3% of my portfolio. And grouping my holdings by sector, holding companies still take up the largest with 23%, followed up by real estate and banks tied at 15%, REITs 12%, tech which is solely Globe 12%, energy 7%, food and chemicals 6%, my index fund holding which is in my VUL 4%, and retail 6%. Now I'm just showing my index fund holding here, but this isn't included in the overall value of my portfolio that I'm showing to you every month. So with that, this ends my monthly update. Now I would like to leave you with the wisdom of Warren Buffett. Success in investing doesn't correlate with IQ. What you need is a temperament to control the urges that get other people into trouble in investing. This is to close up all that I said a while ago. A lot of Filipinos have fallen victim to scam investments because they seek immediate returns, an easy way to get rich. Imagine if only you just invested that money into the right vehicle, the returns would have compounded for you. Instead, most are stuck going back to zero, and some are even negative because they loaned the money for the investment scam. Imagine the years wasted. Same in stocks, a lot of investors lose money because they invest in hype companies that have bad financials. They let their emotions make their decisions for them. That's why temperament to control the urge to invest in these things is what separates a value investor from a speculator. By having this quality, even when you're not good in numbers, you can outperform most investors, even those so-called stock gurus you see online, but don't show their progress. So I hope you've learned something from this video, and if you did and still haven't clicked the like button, please do so before leaving. Thank you and see you in the next video.